Today we are embarking on a journey, but it's not your usual business trip. We are not chasing the next shiny object. We are going after something real, something that lasts. We are hunting for the timeless principles, the stuff that's worked for the best builders and investors for decades, and how you can use them to dominate, whether you're buying a mom and pop shop, scaling a manufacturing giant, or building your own investment firm. And our guide, this guy, Mehta. Now, Mehta is different. He's in the trenches. He's the mind behind Greenoaks Capital. And he's built a reputation for betting big, thinking long term, and finding those founders, those rare individuals who can change the whole game. You might think, venture capital, technology companies, that's not me. But hold on, because Mehta's story, his mindset, it's a gold mine for anyone serious about building something that endures. And get this, Mehta doesn't do a lot of interviews. He's a private guy, but he recently sat down with a Colossus crew. And that conversation, I've been digging into it, pulling out the real lessons and stuff you can use yourself. Neil doesn't play the short game. He's not about the quick flip. He's about finding the right people, the right business, and then going all in. And that's a lesson that translates. It doesn't matter if you're building a software company or a construction business. It's about seeing the real value, having the intellectual curiosity to deeply understand it, and the patience to build something that built to last. So get ready, because this isn't your typical podcast. This is a deep dive into the mind of a guy who gets it, and it's going to change how you think about building or investing in business. So let's go. Now, for those of you who might not know much about the top levels of venture capital world, let me explain. Mehta is the founder of Greenoaks Capital. This isn't a company that's always just chasing the next big thing. Greenoaks is known for focusing on a small number of investments, having a long-term plan, and really focusing on teaming up with what Mehta calls generational founders. Those rare people who can build truly game-changing companies. Mehta himself is a very interesting person. He's the first person in the family born in America. His parents taught him the value of hard work, good craftsmanship, and how capitalism can help people get ahead. He reads a lot, thinks deeply, and even in the fast-moving world of venture capital, he makes it the priority to build real, lasting relationships with people he supports. Greenoaks, with Mehta in charge, has played a big part in the success of companies like Coupang, the South Korean online store that totally changed its market, then Figma, the design tool that's become essential for creators everywhere, and Carvana, the online car dealers that's changing how we buy and sell cars. These successes aren't just lucky guesses. They are the result of a very careful, disciplined, and people-focused way of investing. What makes Mehta and Greenoaks special, in my opinion, is their strong commitment to a few core ideas. They're not afraid to go their own way, to invest in companies that others might ignore. They put the quality of the person running the company above everything else. They do incredibly thorough, almost like detective-like research, and they have the patience and belief to support their companies through good times and bad, not just for a few years, but for decades. This approach has led to amazing results. Greenoaks has made billions for its investors, consistently doing better than the overall market. But more importantly, they've earned a reputation as a trusted partner for some of the most creative and driven business leaders of our time. So, as we can explore the lessons we can learn from Mehta, remember that this isn't just about venture capital. It's about the basic way of thinking about business, a way that emphasizes creating lasting value, understanding things deeply, and the power of human connections. These are ideas that any business can use in any industry, and they can help us become better investors, smarter buyers, and more effective builders. So let's jump in. Topic number 1, finding hidden gems, the power of contrarian acquisition strategies. You know, there's a saying that goes something like, when everyone's rushing to one side of the boat, it's time to head to the other. That, in short, is the contrarian approach that Mehta uses, and it's a powerful lesson for anyone looking to buy a business. For those of you on the hunt for acquisitions, the popular choices, the booming industries, the businesses with fancy marketing and obvious growth often come with high prices and tough competition. Everyone's chasing the same deals, pushing prices up and making it hard to get good returns. But the real chances to make a lot of money, the ones that can lead to truly exceptional profits, often lie in the unglamorous, the seemingly complicated, or the businesses that are like struggling for a while. This takes a different way of thinking, a willingness to work hard and see potential where others only see problems. To illustrate this, let's go back to an early experience that shaped Mehta's way of doing things. He tells a story about him being 24 years old, working for a TE show, and bidding at an apartment building in Guangzhou, China. Now, Guangzhou back then wasn't this huge, busy city it is today. Mehta describes it as a place still dealing with pollution from factories and rapid growth. And the auction itself? Well, not a fancy meeting room, but a simple setup with lawn chairs on an empty lot, his main competitor being a local farmer. This scene, almost unbelievable in its contrast, shows a crucial lesson. Real value often hides where most people aren't looking. Mehta wasn't afraid to go off the beaten path to see potential in what others perceived as a backwater. He wasn't swayed by the clamor or the hype. He focused on the basic strengths of the deal. This is the way of thinking that applies directly buying businesses. Think about it. We often get thrown into a BL of hot sectors, the tech startups, the trendy consumer brands. But what about the less exciting industries that quietly keep our economy running? Imagine a regional trucking or a warehousing business that's been making money for decades, but is still using old-fashioned paper systems. Doesn't have good software to plan the best routes, or has a website that looks like it's from the early 2000s. Most buyers would probably ignore the company. They might be put off by the lack of new technology or seemingly difficulty of the industry. However, a smart buyer, using a bit of Neil Mehta contrarian thinking, could see a great opportunity. They'd realize that the core of the business, moving goods efficiently, is fundamentally strong and will always be needed. And they'd also see a huge potential to improve things by using modern technology, things like computer programs to plan routes, warehouse management systems, and an easy-to-use website. They could greatly improve efficiency, cut costs, and make customers much happier. They could make the business run better, organize its operations, and find ways to make more money. And suddenly, this unsexy business becomes highly profitable and able to grow. And here's the key. The initial price to buy the business, because it seems out of date, becomes a big advantage. You're not just buying a business, you're buying a chance to create a lot of value through smart improvements. You're basically buying the raw materials and then making a masterpiece. We see this same idea in the story of Constellation Brands. At first, they weren't chasing the established high-end vineyards and distilleries. They didn't try to compete with the big guys for the most prestigious products. Instead, they strategically bought less well-known brands and focused on getting their products to stores efficiently and marketing them effectively. They saw potential in types of drinks that weren't considered top of the line, affordable wines, everyday liquors, and they turned them into huge successes. This wasn't about buying the most glamorous things. It was about finding basically good businesses with room to grow and improve. Or think about the regional manufacturing business that makes specialized parts for other companies. Maybe it mostly sells to customers nearby, and the owner, who's getting ready to retire, hasn't invested in selling to other countries. Many buyers might see limited chances for growth. They might be intimidated by the complexities of manufacturing or think that a regional business can't get any bigger. However, a more strategic buyer, again with that Mehta-like contrarian view, would study the global demand for these parts, find potential customers in other countries with less competition, and invest in getting the necessary paperwork and language skills to sell internationally. Suddenly, a business that seems stuck in one place gains access to a much bigger and more profitable global market. The initial price to buy the business might have been reasonably based on its local sales, but the potential profit from selling overseas could be huge. So, how do you use this idea in your own search for a great business to buy? It requires a deliberate change in how you look at deals. Don't just filter by industry buzz or revenue growth. Look for businesses with solid basic strengths, like steady profits, a loyal customer base, or a unique product or service, even if it's not doing great right now. Your research when you're looking at these businesses will be different. Instead of looking at past sales, you'll be heavily studying how much better the business could be. You'll need to create a clear plan for what you'll change after you buy it and how those changes will increase profits and grow. The contrarian approach takes more vision, more knowledge of how to run a business, and a willingness to deal with some complexity. But the rewards of finding these hidden gems, businesses that others have missed, can be very large. You're not just buying a company, you're buying a story that can be rewritten, a potential that's waiting to be unlocked. And that leads us to a next important lesson. Topic number 2, the decisive power of backing the right leader. Now, let's talk about people, because in the world of business, it's never just about numbers. It's about the people who create those numbers, who shape the company's culture, and who ultimately decide whether the business succeeds or fails. This is a lesson that Neil Mehta has learned over and over in his work with founders. He didn't just put money into companies, he put into people. He realized that behind every great business is a great leader, someone with a vision, the drive, and the sheer determination to make things happen. Think back to that visit to BYD. This is the electric car manufacturing company back in many years ago in China. Neil Mehta would have easily been turned off by the messy warehouse, the apparent chaos, but he wasn't. He was drawn to the founder, Wang Guangfu. He saw something special in him, that spark of energy, that strong belief in future of electric cars. That really impressed him. The highlight of basic truth, the quality of the person in charge is often the most important factor in a business's success. You can have a great product, a great market, and a great plan, but without the right leader, it can all fall apart. Mehta's interest in founders isn't just emotional, it's a key part of investment strategy. He's become very good at recognizing those rare people who have what it takes to build something amazing. He looks for exceptional intellectual horsepower, a unique ability to see opportunities and solve problems that others can't. These are the people who can connect the dots, who can predict where things are going, and who can explain their ideas in a way that gets people excited. Laser-like focus, an unwavering commitment to their vision, not getting distracted by other things. These are the people who can stay on track, who can prioritize what's important, and who can resist the urge to chase every new fad. Next one is obsessive customer centricity, a deep, almost like intense dedication to understanding and making their customers happy. These are the leaders who put the customer first in every decision, who really care about what customers need, and who are always looking for ways to make things better for them. Next one is unbreakable resilience, a refusal to give up when things get tough. These are the people who see problems as chances to learn and to grow, who can recover from setbacks and who inspire their teams to just keep going. Compelling and credible vision, the ability to explain a clear and inspiring future for the company. These are the leaders who can get their teams excited about the common goal, who can make people believe they can achieve this seemingly impossible, and who can paint a picture of the future that's both exciting and believable. And the last one is a tough of maverick thinking. People who aren't afraid to go against what everyone else thinks. These are the innovators, the game changers, the ones who dare to be different and who are willing to take risks to make their vision a reality. Now, let's make this practical. You're not necessarily trying to find the next Elon Musk or Steve Jobs, but these same qualities to some degree are what you should be seeking when you're buying or investing in a company or when you're building one on your own. So how do you find these amazing leaders when you're buying a regular business? It's more than just reading their resume and having a standard interview. You need to assess their intellectual curiosity and adaptability. Are they always learning and looking for ways to improve the business? Do they welcome change or fight it? Look for examples of past innovation and a real interest in understanding what's happening in the market. Ask them about the time they changed their mind about the big business decision, and don't forget to ask why. Next one is strategic thinking and vision. Can they explain a clear and exciting plan for the future of the business? Do they think beyond the day-to-day operations and see the big picture? Ask them about their long-term goals for the company, their plans to reach those goals, and how they see the industry changing over the next 5 to 10 years. Next one, execution capabilities. Having a vision is one thing, but being able to make it happen is another. Look at their past successes in carrying out plans and getting real results. Ask for specific examples of challenges they've overcome, projects they finished successfully, and how they measure success. Emotional intelligence and communication skills. Can they inspire and motivate their team? Do they communicate well and build strong relationships? Watch how they interact with their current employees and how they handle tough questions. Look for empathy, good listening skills, and the ability to bring people together. Integrity and values. Do their beliefs match yours? And what's best for the long-term success of the business? Look for examples of ethical decisions, a commitment to build a strong and trustworthy company, and how they deal with situations where their own interests might conflict with the company's. It's helpful to spend a lot of time getting to know the existing management team before you buy a business. You might have several informational conversations, watch how they work with employees, and even spend some time working alongside them to get the first-hand sense of their skills and how they lead. Imagine spending a week shadowing the current CEO of a business you want to buy, attending team meetings and seeing how they make decisions. This immersive experience can reveal far more than a few formal interviews. You might also want to spend some time with key employees, customers, and suppliers to get their opinions on the leadership team's effectiveness. Topic number 3, riding the wave of transformative shifts. The business world never stays the same. New technologies come out, customers' tastes change, and the whole industries can be turned upside down almost overnight. To do well in this changing world, you can't just react to what happens. You need to be proactive. You need to see big changes coming and set up your business to take advantage of them. This is a lesson that Neil Mehta understood early on. His early bet on the internet wasn't just about passing fad, it was about recognizing a fundamental change in how we live, work, and connect. He saw the internet not just as a new technology, but as a new platform that would disrupt virtually every industry. For those in traditional businesses, this means constantly scanning the horizon for disruptive forces. What are the technological, societal, or economic shifts that will redefine your industry? How can you position your business to not just survive, but thrive in this evolving environment? If you are like myself, many of the things I've been covering so far, it's really like a very basic things, but this is something, and this is one of the reasons why I decided to do this episode and this research, was that I started listening on Neil and I was like, it makes sense what he talks about. Obviously, he's extremely smart, extreme track record, all those things. But the more I kept listening, it comes down all those basic things and covering all this, and we go even deeper with some of those. And I left the best things till the end, so I hope you enjoy. So let's keep going. So coming back to how do you implement this mindset of proactive adaptation in your own business? Number 1 is staying informed, regularly reading industry publications, attending conferences, and networking with experts to stay abreast of emerging trends. Don't just rely on what you already know. Actively seek out new information and different viewpoints. Number 2, actively experimenting. Being willing to pilot new technologies or approaches on a small scale to test their viability for your business. Don't be afraid to try new things, even if they seem a bit risky at first. The key is to learn quickly and adapt based on the results. Next one is seeking external perspectives. Engaging with consultants or advisors who have expertise in emerging trends relevant to your industry. Sometimes an outside perspective can help you see opportunities or threats that you might have been missing. And this is a lesson I learned from the previous solo episode I did about building relationships, which could be your moat. Sometimes an outside perspective can help you see opportunities and even more importantly, threats that you might have missed. Next one is being agile and flexible. Having the ability to adapt your business strategy quickly in response to changing market conditions. A very basic thing. The world is moving faster than ever before, and businesses that can't adapt quickly will left behind. And that brings us to a core principle that underpins Neil Mehta's entire investment philosophy: the power of deep understanding and bold conviction. You know, in the world of investing, there's lots of noise. There's market chatter, there's expert opinions, there's a constant barrage of information vying for your attention. It's easy to get caught up in the hype, to follow the crowd, or to make decisions based on superficial metrics. But Neil Mehta has a different approach. He believes in the power of deep due diligence and the courage to act on conviction. He doesn't just scratch the surface, he immerses himself in the detail. He digs deep, he talks to customers, he dissects the business model, and he forms his own independent judgment. And it's this unwavering conviction born from a profound understanding of the business that allows him to make bold bets when others are hesitant. Greenoaks' early and significant bet on Coupang, the South Korean e-commerce giant, provides a masterclass in this approach. Neil didn't just see another online retailer. He saw a company with the potential to revolutionize an entire market. He spent countless hours understanding Bom Kim's vision, the founder of it, the South Korean e-commerce landscape, and the unit economics of Coupang's operations. And what he found was a company with a fanatical focus on the customer experience, a willingness to invest heavily in infrastructure, and a leader with a drive and intelligence to execute on a massive scale. He developed an unshakable conviction in Coupang's long-term potential, and he wasn't afraid to back that conviction with a significant portion of his fund. Right after listening to this episode, I suggest you to go and read about the story of Coupang, and in each founding round, Neil has participated, and if I'm not wrong, I believe he has invested more than $1 billion in this company, and the returns obviously have been wild because Coupang is a huge business now. So this is like a lesson that resonates deeply for anyone looking to buy, build, or invest in a business. It's not enough to just look at the headline numbers or follow the latest trends. You need to develop a deep, nuanced understanding of the underlying business, its competitive advantages, and its long-term prospects. And here are some of the key takeaways. Number one, as I said, go beyond the surface. Don't rely on superficial metrics or industry buzz. Immerse yourself in understanding the core drivers of the business, its competitive landscape, and its customer base. Talk to customers to understand their pain points and why they choose this business over its competition. It's very basic things, but I met lots of people thanks to what I do, and talking to customers, it's not very common still till this day. Even the folks who are doing like big deals, like not all of them are willing to do all those things. I believe doing those things, unscalable things, which consume a lot of time, they will pay off. They will pay off big time. Next one, develop unshakable conviction. Once your deep analysis yields a strong thesis, have a courage to act decisively, even if it means going against the prevailing sentiment. Mehta's willingness to commit a significant portion of his fund to Coupang early on exemplifies this. This requires intellectual honesty and the willingness to stay up by your own analysis even when others disagree. Not many people were willing to do that, and that's what makes him special, and that's why we're reading about him today, and that's why we're studying about him today. Focus on the enduring value proposition. Neil Mehta talks about this a lot. Coupang's jaw-dropping customer experience, wasn't a fleeting marketing gimmick. It was a fundamental pillar of their strategy. In any business, a relentless focus on providing exceptional value to the customers is the bedrock of the long-term success. Think about Southwest Airlines' early focus on low fares and efficient operations, which created a loyal customer base and disrupted the airline industry. They didn't try to compete on luxury or amenities. They focused on providing the best possible value for a specific segment of customers. So, how do you implement this in your own journey? Invest time in due diligence. Don't rush the due diligence process. Spend the necessary time to truly understand the business you're considering acquiring or building. This might involve weeks or even months of research, interviews, and analysis. Build your own thesis. Formulate your own independent opinion based on your research, rather than simply following the crowd or relying on the opinions of others. Understand the why. Go beyond that what of the business and understand the fundamental reasons why customers choose this business over its competitors. What unique value does it provide? What problems does it solve? Have the courage to be different. Sometimes the most successful investments and business decisions are contrarian. Be willing to go against the grain if your analysis supports it. This requires intellectual independence and the willingness to change conventional wisdom. This approach requires more than just analytical skills. It requires intellectual courage, the ability to think for yourself, and the willingness to stand alone if necessary. But the reward of developing this kind of conviction are immense. You'll not only make better decisions, but you'll also have the confidence to act decisively when opportunities arise. And that brings us to another core principle that guides Neil Mehta's investment strategy, the imperative of ruthless prioritization. In the world of business, it's easy to get distracted. There are countless opportunities, countless projects, countless demands on your time and resources. But the most successful investors and entrepreneurs are those who can filter out the noise and focus on what truly matters. This is a lesson that Neil Mehta seems to have internalized deeply. He famously stated, "We are only focused on two things in life: great business models and great founders." That's it. Two things. They're focusing on just great business models and great founders. I'm asking from you, what are you focusing on? Is it just two things? Is it just 5 things, 10 things? In Neil's case, great business models and great founders. That's it. This might sound overly simplistic, but it's a powerful reminder of the need for absolute clarity and focus. In the often chaotic world of business, distractions around, there are always new trends to chase, new technologies to explore, new competitors to worry about. But Mehta's laser-like focus on these two core elements, the quality of the business model and the quality of the leadership, allows him to cut through the noise and concentrate on what truly drives long-term value. And as we can see his track record, this strategy works. This strategy works very well. For buyers, this means rigorously evaluating potential acquisition based on these two core criteria. Does the target business possess a sustainable and scalable model? Is it led by a capable and visionary team? If either of those is lacking, proceed with extreme caution. Don't get sidetracked by tangenting factors like fancy offices, impressive marketing campaigns, or short-term revenue growth if the underlying business model isn't sound or the leadership isn't strong. Again, number 1, does the target business possesses a sustainable and scalable model? And number 2, is it led by a capable and visionary team? For example, you might be tempted by a business with an impressive revenue growth, but if that growth is driven by unsustainable marketing spending or a flawed pricing strategy, it's not a truly great business model. Similarly, you might be drawn to a company with beautiful offices and a strong brand, but if the leadership team lacks the vision and execution capabilities to scale the business, it's not a great bet. For builders, this principle of ruthless prioritization is equally important. Constantly assess whether your efforts are truly strengthening your business model and empowering your key people. Eliminate initiatives that don't directly contribute to those core pillars. Are you spending too much time on non-essential tasks, attending unnecessary meetings, or pursuing opportunities that don't align with your core strengths? Are you investing enough in developing your team, attracting top talent, and building a culture that fosters innovation and execution? Ruthless prioritization means saying no to good ideas to focus on the truly great ones. It means being willing to walk away from opportunities that don't just fit your criteria, even if they seem promising on the surface. It's about having the discipline to stay on the course and focus on what truly moves the needle. This brings us to the next important concept, navigating turbulence with independent thinking and long-term vision. Again, the world of business is not always a smooth ride. There will be downturns, there will be crisis. There will be times when everything seems to be going wrong. It's during these periods that your true mettle as an investor or business leader is tested. And this is where the lessons from Neil Mehta become particularly relevant. He has demonstrated time and time again the importance of independent analysis and a long-term perspective in navigating turbulent times. A prime example is Greenoaks' investment in Carvana. The online used car retailer experienced a dramatic stock price decline during the pandemic. The stock price used to be $340 and it dropped below 5. So just do the calculations. It used to be 350 back in August 2021 and it was 4.05 in December 2022. So this is what happened with Greenoaks' investment in Carvana. Many investors would have panicked. They would have sold their shares, which they did, cut their losses and moved on the next hot thing. But Neil Mehta and Greenoaks, they took a different approach. They didn't just follow the herd, they dug in. They went back to its first principles. They spent countless hours talking to Carvana's customers, understanding the company's unit economics and analyzing its long-term potential to disrupt the used car market. And when doing the research, Neil mentioned that he flew and met the owner of Carvana, and they had a long conversation, and it was very deep because the founder of Carvana shared all the personal stories, like how it has affected the employees and their partners' families, and he was really worried about all this. And but then Neil saw that, okay, there is more in this, and all this, like as we talked before, this deep analysis, this deep due diligence of learning about not just about the business, but the people behind, and especially during the tough times, and that made them to bet even more. And doing this research, they bought shares when it was $100 per share, $50 per share, and every time they did it, they were like, oh, the emotions were crazy because it dropped, I think, below 30. Then they still bought, but I think when it was less than 5, obviously super worried. But they held, and now we're doing this research on them. And so while others were selling, Greenoaks was buying. They saw an opportunity to acquire a stake in potentially generational company at a deeply discounted price. This required not only analytical rigor, but also immense courage and conviction to go against the prevailing sentiment. So how do you implement this in your own journey? Buying traditional businesses, investing in traditional businesses. Few things. Develop strong analytical skills. Build conviction through research. This is the best way to do that. And maintain a long-term horizon. So when you make a decision, probably did your research enough, good enough, you know that if something happens, there is still this potential to grow, to do even better. Even though there is a small crisis, like things, for example, like COVID and things like this happened, for example, the Carvana case. And communicate clearly with stakeholders. During challenging times, transparent and consistent communication with investors, employees, and other stakeholders is crucial for maintaining trust and confidence. Not just sending updates. I shared this some time ago. I think it was the Harry Stebbings portfolio. One time it was like 38 investments, and only 7, I believe it was 7, who gave weekly or monthly updates. And there were some cases which they haven't received an update for longer than a quarter. So it's insane. And that's why I did this research episode, because it's so many basic things. And these basic things are working immensely well for Neil Mehta, and learning this yourself and maybe repeating these things again, you can do better yourself as well, because the basic things, we keep forgetting them. So all this brings us to a related but often overlooked lesson, the cost of outsourcing fundamental analysis. We have access to more information than ever before. We can get expert opinions, market data, and the industry reports with a click of a button. It's tempting to rely on these external sources and outsource our thinking to others. But Neil Mehta's story serves as a stark warning against this. He candidly admits that Greenoaks missed out on investing in Elon Musk and SpaceX early on because they relied too heavily on the opinions of industry mentors who warned them away. These mentors, while undoubtedly knowledgeable, had their own biases and perspectives. They focused on Musk's perceived flaws, his management style, his demanding personality, rather than on the transformative potential of SpaceX and his ability to execute on a seemingly impossible vision. Mehta and his team, in their own words, outsourced that work. They didn't do their primary research themselves, and as a result, they missed out on one of the greatest investment opportunities of our time. This is a mistake that Mehta says cost his investors billions of dollars, and it's a lesson he has taken to heart. He vows to never not do the work myself again. And this is a powerful reminder. Never outsource your core due diligence. In the world of investing and business, there's no substitute for doing your own homework. You can't rely solely on opinions of experts, the reports of analysts, or the advice of consultants. You need to develop your own ability to analyze and understand opportunities. Think about the venture capital firm that passed on investing in Google in its early days, based on the advice of a prominent industry expert who dismissed this search engine as a fad. This illustrates the high cost of relying solely on external opinions without conducting your own thorough analysis. Ask from yourself, when was the last time you didn't do enough homework, you relied on someone else's opinion or advice, and that led to not the best decision? We all have made those mistakes. Maybe it's because of we are lazy, maybe because we didn't know better, and maybe we just didn't want to do the work. And finally, let's touch on more intangible but equally important aspect of Neil Mehta's philosophy: the art of seeing beauty in business. In the often cynical world of finance, it's easy to get caught up in the numbers, the spreadsheets, and the endless pursuit of profit. But Neil Mehta brings a surprisingly different perspective to the table. He talks about viewing founders as artists and seeking beauty in the business he invests in. Now, this might sound a bit abstract, but it speaks to a deeper understanding of what truly drives lasting success. It's about recognizing the passion, the craftsmanship, and the genuine value creation that underpins truly exceptional companies. Mehta isn't just looking for businesses that generate high returns. He's looking for businesses that are creating something of lasting value, something that delights their customers, something that makes the world a little bit better. He sees founders as artists painting their own painting, and he wants to be a patron of that art. As investors and operators, we can all learn from this perspective. We shouldn't just focus on the bottom line. We should also be striving to create something that we're truly proud of, something that has a positive impact, and something that reflects our own values and vision. So this story of Neil Mehta's journey, it reminds me that success in any industry, it's not just about numbers and transactions. It's more about people, vision, and the relentless pursuit of excellence. And by embracing a mindset of unconventional thinking, prioritizing exceptional leadership, deeply understanding market dynamics, acting with conviction, and focusing on enduring value creation, And yes, even seeking the underlying beauty in what we do, we can all become better investors, more astute buyers, and more effective builders. These aren't just abstract concepts. They're like very practical tools that you can use as yourself to make better decisions, to build stronger businesses, and to achieve greater returns in whatever you do. So take these lessons to heart, do your own deep work, back the right people, seek out those hidden gems that others have overlooked. And there must be a reason why they've been overlooking this. So do your homework and strive to create something that not only generates returns but also adds value to the world. These aren't just lessons for chasing unicorns. They are fundamental principles for achieving lasting success and building a meaningful legacy in any business, in any industry. So thank you for tuning in. Now go out there and build something remarkable. Again, thanks a lot for listening. I'll try to do those solo episodes once in a while of the work I've been doing, of the research I've been doing, of great people. And again, thanks for listening. See you in the next one.